This is the briefing for Monday, March 3rd. Well, if you've been listening to these briefings for the past several weeks, you know that the market has been in a rotational pattern. This is the spiders on a daily basis, and you can see this rotational pattern pretty clear. Really in multiple time frames, you get an upper extreme that's established right at the 610 area, and then when you get a rotational pattern just below that, before we see another rotation back down to test the 580 area in the spiders. Now, I'm going to switch to a weekly chart here because I think this is important in terms of realizing exactly where we are in price development. Now, this weekly chart, you can see this is a series of higher highs and higher lows, so it is an uptrend on a weekly basis and goes back to basically this is going back to November of 2023. So over a year ago, and you can see this series of higher highs and higher lows. Now, this low right here on this day, that low is 575. Breaking that low breaks the series of higher highs and higher lows, which then suggests that the market is transitioning from this trend into a greater degree time and price counter trend rotation, because it would be breaking the series of higher highs and higher lows on a weekly basis. Typically on a longer term time frame, or I should say typically in the longer time frames, the counter trend rotations are deeper and take more time because it's based on a greater degree time and price move. So basically, as we're looking at this, and you can see even from an internal perspective, you can see volume is declining here on the last 3 weeks of trading, but 52-week highs minus 52-week lows declining, breadth declining pretty dramatically, and you can see the divergence that was right through here as well. Looking now, I'm going to switch this to the Qs. So we can see the series of higher highs and higher lows. This low was broken in the Qs, and you can see this trend has now been broken also in the Qs. Same thing, 52-week highs minus 52-week lows, and breadth just declining as well. So the market is weakening from an internal perspective. Looking at the Russell has been leading this move to the downside, and you can see that it has broken this low here. It is broken through the 210 area, and looks like the next level of support is at the 200 level in the IWM. Now, I want to go back to the daily charts. So here you can see this is the last 3 days of trading. So you can see on Friday we tested the 580 level, and today we came right down to 580. In fact, the low was 579.90 and then bounced off of it going into the close. Now, on a daily basis, you can see volume is increasing. You can see that right through here. 52-week highs minus 52-week lows are trending lower. And of course, breadth is trending lower as well. Now, we did get that spike on Friday, which was very unusual. Come down to test the 580 level, and then buying came in the last 30 minutes of trading and just absolutely on pretty high volume, just drove everything right back up through the 590 level, which was the next level of resistance. So where we are is that breaking 580 is going to break out of this area of rotation, which puts the market in vertical development. This is the 575 level that we looked at on the weekly chart. So 580 down to about 575 is a critical level. Breaking 575 is going to suggest a greater degree time and price move, counter trend move, which should be deeper in terms of price development and greater in terms of price to the downside. So watch what happens, especially tomorrow. We had some buying that came in, so I'm not the only one that looks at these support and resistance levels and are analyzing counter trend rotations. But there's a lot of people in the market know how important this level, this 580 level, is in these spiders. So watch that. If we close below that tomorrow, and we can stay below it for at least 2 days, that would then increase the probabilities that we have transitioned into a greater degree time and price move to the downside. what I want to caution on is this here. This appeared to be a breakout move, but there was no follow through the next day, and you can see it traded immediately back above the 580 level. In fact, it closed above the 580 level on the day that it tried to break out. And then, of course, we got this rotation back to the upside. So watch very carefully what happens below 580. If we close tomorrow below it, then that's going to suggest that we should see follow through on Wednesday. And if that happens and we continue to close below 580, then that's going to increase your probabilities that we're going to see something tested in the lower levels, typically around the 565 level or potentially around the 545 level. Now, looking at where we are in terms of the Qs, you can see it's already broken through this 505 level. It's already traded through this this day here, which was that false breakout. Friday we closed above the 505 level, so we need to see follow through in the Qs if we're going to see a rotational pattern down to the downside. Closing below 505 in the NASDAQ or the Qs is critical, but follow through tomorrow is even more critical. So this does not appear to be another false breakout day, because we traded below here, false breakout. We retraced it the next day, traded below it the next trading day. So we need to see follow through in terms of the Qs as well. And in terms of the Russell, the IWM trading below 215, once again, false breakout, retraced it all the way back just above the 215 level, and then of course another breakout today. Next level of support in the IWM is 205, and resistance now is 215 up to today's high. We are, in terms of overbought and oversold, we are neutral in the NYSE. We are approaching extreme oversold condition in the NASDAQ, so it's going to be interesting to see how this is resolved. Any additional downside in tomorrow's trading, watch for divergence in market breadth. This is the spiders on a 60-minute basis, the Qs on a 60-minute basis, and the IWM on a 60-minute basis. You can see what's happening with market breadth, how it's deteriorating, volume beginning to increase in the indices to the downside as well. So it's going to be very interesting to see if we get lower low below today's low. Make sure there's not a divergence in breadth, because we are at a critical support level, and that could even suggest that we will not break through, but we're going to see another rotation back to the upside. So on a short-term basis, watch for a divergence in breadth tomorrow on a lower low below today's low. That would suggest the potential for a false breakout and some type of rotation or pause to work off the oversold condition, especially in the Qs. And if that doesn't occur and we break down below 580 and today's low, then we need to close below it, and then we need to see follow through on Wednesday to confirm that this is transitioning into a greater degree time and price counter trend rotation. Have a great evening, and I will pick this back up tomorrow.